Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right, everybody, welcome back to a major stream here as we prepare together for possibly the biggest stream of the month, the biggest news of the month. It is, of course, the decision from the Federal Reserve. Are they going to keep interest rates the same, raise them, cut them? Probably not likely. And more importantly than that, what are they likely to do next? All of that and more as we get into today's news announcements. Again, we are here throughout the entire session. We've got our afternoon blocked out for us here as the A1 Trading Office. We are here ready to cover the markets with you. And I want to jump right into it. We've got guests coming onto the show. Frank will be here later. We got Chris Pulver coming in, some heavy hitting, some heavyweights in the markets to help us out with this particular announcement, which is so impactful to markets. I want to invite you guys, if you're just tuning into the stream, hit the thumbs up button. Let us know where you're tuning in from in the chat, and let's talk a little bit about markets. Now, one thing you guys will obviously have known if you've been paying attention to the markets today, gold is flying. And notably, it's not just the dollar, it's not just gold moving up. It's really a lot of dollar weakness ahead of this. And you know, the thing about this is I was actually pretty bullish on the dollar this week, but it seems like price action did not agree with me. You can see price has completely erased this kind of upward trajectory and now looking pretty weak as we go into the FOMC news. Now, of course, guys, why is this so impactful? Well, you got a couple things on your table to think about. You've got what the Federal Reserve is going to do with interest rates. So they're going to hold them, hike them, cut them. Probably, most likely, they're going to hold them at where they currently are. That's where market sentiment is. We'll see if that does come into play. That's what I'm thinking will happen. The next thing is, of course, will the central bank here in the United States be looking to hold it for an extended period of time? We're at 5%. I mean, let's actually pull this up, guys. We'll pull up the number. Are we going to keep interest rates where they're at, 5.5%? Are we going to keep that there for quite some time? Or are we going to start to cut rates anytime soon? Cutting rates, of course, would be very bearish for the dollar, whereas keeping them high can actually be pretty elevated for the US dollar. So we've got all of that coverage. We're going to take a look at lots of charts here today. And, you know, first of all, let's take a look at the watch list, see what's going on the EDGEFINDER. This is generally speaking where I am currently biased when it comes to all of these different charts. You've got the S&P 500 looking very bearish. You've got the US dollar crosses, by the way, looking bearish. Pound dollar, euro dollar, Aussie dollar, Kiwi dollar. I'm pretty bearish on these things. Gold is lightly bearish, sorry. And then on the flip side, you've got oil still very bullish. This has been a great trade if you've caught that on the EDGEFINDER. The dollar yen still very bullish. Dollar Swiss very bullish. Dollar South African rand. Dollar CAD. These things are kind of our general setups right now that we will be looking at throughout this stream. Like I said, guys, there's 400 of you. If you would do me a quick favor and do the stream team here at Day One Trading, we like to call ourselves the stream team. If you would do us a solid, just hit that thumbs up button. It really does help to get this show up and running. We will be taking a look at charts throughout this segment and reacting with you here to the major news announcements. Guys, I do also want to say something real quick. We've got a little bit of time here before our news announcement drops. I just want to let you know that we have decided as a team to do a super sale on the EDGEFINDER for this stream only. Let me just say, I know a lot of you guys are regular viewers to the show. If you're somebody who has been thinking about getting a copy of the EDGEFINDER, then you are in luck if you are here live with us right now. We're going to drop a link in the chat right now. If you click this link and send us a direct message We are offering for stream viewers right now only 45% off of the Edge Finder. So let me show you guys this, and then we'll get on to some charts here. And again, we'll be joined by Chris Pulver in just a few moments. If you're watching us, we're doing a stream sale. So we've never actually done this. Actually, we have. It's been a very long time since we've done this. We are offering some copies of the Edge Finder at a super discounted rate for those of you who are with us here live. So click that link. We just dropped it in the chat. If Chandler, if you don't mind dropping it a few more times here. If you guys haven't already gotten yourself a copy of the Edge Finder, click this link. Click chat now and do the 1 hour only 45% off Edge Finder sale. This discount is only for this stream. This is for anybody who is here with us live. If you want 45% off the Edge Finder at any point during the stream, that price is going right back up to its full price after this. This is almost a 50%. It's half the usual price for the Edge Finder during this stream only. We'll talk more about this later. But again, if you would like access to the Edge Finder, if you've been a regular stream viewer and you're thinking about getting a copy, that's the lowest price we have done all year. And it's going right back up after this live stream. That is a thank you to our supporters. We're giving out some copies today at a super discounted rate. So take advantage of that before the end of the stream. Again, all you have to do is click that link that's been dropped, send us a direct message, and someone from our team will hook you up with a copy for a mega discounted rate. With that said, guys, the dollar, what are we looking at here? We're coming in hot on the, excuse me, we're coming in hot on the news announcement here. In about 14 minutes, we are going to get the decision, of course, the number from the Federal Reserve, whether they raise interest rates, cut them, etc. I want to show you guys one chart here, and then we're going to bring in Chris Pulver, who, from a macroeconomics standpoint, will help us to decipher a little bit of what's going on with the Fed, and he will probably be sharing his take, his ideas, his trade setups. I want to show you guys where the oil market is. Now, this is something very unique, and it's not a chart that we talk about all the time, but quick rundown on oil before we bring in Chris Pulver. Oil's been floating higher. This is showing that there could be some more inflationary pressures coming, and that may keep the Federal Reserve on the hawkish side of things. Many traders are assuming what is coming to be a hawkish hold. Most likely, they're going to hold interest rates without changing them, but the narrative is expected to still be hawkish from the Federal Reserve, which probably acts to actually strengthen the dollar. So I'm looking at dollar pullbacks. I'm also still bullish on oil. It does seem like the commodity continues to float higher. We hit a nice level of support, bounced off that level. What I'm looking for, guys, throughout this stream, possibly even, let's see if we can get breakouts on oil higher. And if we do so, I'm very much looking for pullback opportunities long. The Edge Finder has a nice confirmation for us. Pretty much all of our algorithm is pointing towards a bullish signal on oil. It has been for a little while now, and it's been a very nice signal here the last few weeks. Let's bring him in, guys. We're going to bring in Chris Pulver here and say hello to Chris. Hey, Chris, how are you? Chris, can you hear me? Hopefully you can.
Hey, Nick, everybody. Sorry, it might be a little choppy. I'm just getting my broker platforms up and running, Nick. Just give me a moment.
Okay, no worries. Maybe Chris we'll come right back to you. We'll bring him back in just a second, guys, as he loads up his platforms and everything. Anyways, guys, so we'll bring Chris right back in. He's just getting set up. Like I mentioned, guys, oil pressures are inflationary. Now, if you don't know what that means, if you're not a fundamentalist like Chris and I, the idea here is that oil prices being elevated costs more people have to pay more money at the pumps. And that's just the fact, right? So if more people are paying more at the pumps, they're going to have less money in their pocket to go out and spend. And again, that can be actually hurtful to the U.S. consumer. So it'll be interesting to see how this plays out and how the Fed may react to this. Now, this is just one side of the coin. We mentioned this with the dollar index. The dollar index still is in a technical uptrend. Here's your daily chart, guys. Daily chart, in my view here, the dollar is still in an uptrend. Is it due for a corrective move? Very, very much it could be, right? It could see a deeper pullback, especially with news right around the corner. It is highly likely that we'll get some volatility. We're looking at a daily chart, guys, and it does seem like if the dollar sell-off continues, a magnet zone, I would say, would be this 104.5 level. And from there, I am generally speaking still bullish on the dollar until we start to see breakouts underneath that level. If we see failure there, it's possibly due to something different from the Fed that could be a little bit more on the weak side for the dollar. But overall, the dollar's been in a nice, strong uptrend, and it does seem like inflationary pressures have been sticking around here for a little bit longer than what was expected. So yeah, let's see if we can bring him in now. Chris, are you ready? Give me a thumbs up if you're good, and I'll bring you in. If you're not, then all right, he's good. All right, he's good to come back in. Hey, Chris, welcome back.
Hey, Nick, thanks. Sorry about that little delay. Great stuff to talk about today. I actually have a couple things I want to run by you since we tend to do this every month. So
yeah,
I agree with you on the technicals on the dollar index. I think the dollar right now is bullish until broken, right? So stay with it. DXY, I like the 105 to 106. I think 106 is a good target to start seeing some shorts come in. But what's going to be interesting is I think the CME watch tool is like 99% probability. There's no rate hike today. It's going to be a pause. November, the probability went down even lower for a pause again in November. But I want you to take a look at the SPY, and let's just talk some technicals for a second. Yeah. Because, we've had this conversation a lot this year. What's the dollar index going to do? What's the overall broad market going to do? And if we're on the SPY on a daily time frame, can you zoom out and go and actually like bring in the bottom from last year? Bring in like that 350 bottom. Okay. Yep. So I talked about this a lot this morning in my trading room. And if, I'm not like a big Elliott wave person, but I can see 3 waves and 5 waves pretty clearly. If we start from that low in 2022, when it was basically a September, October low in 2022, if that's our wave 1 to the upside, we just completed like this July to August top is our completion of wave 3. So what you just drew there to trace, that's essentially like a corrective sideways wave 2. Wave 3 we just completed. Now we're in wave 4. Now going back to the low from, let's say, March of this year. If that's all wave 3, March of this year, the low of March. Yep, that one.
Got it.
So that's our wave 3. What formation do you see right there, Nick? If you drag that up and then you're looking at current price, I see an ascending wedge. I see a pennant. I see kind of like a big, it's not a flag necessarily because it's not horizontal, but to me, the bulls are just waiting for the coast to be clear. And, what I'm looking past is I'm looking past all of the fundamental confirmation to be like, why would we go higher? Because it might not make any sense, right? It might be Mag 7, enormous 8. It might be the AI tech rally that continues to drag the broader market higher. I don't know if there's going to be a good reason to say we should go to 480 on the SPY. We should go to 500 on the SPY. But the reality is the market can do it. And I think technically speaking, it looks pretty darn good. So to wrap this all up, my discussion this morning in my trading room was there's 2 spots I'm willing to trade and be bullish on the SPY. One is just a pretty clean breakout above like 455 and 460, and then stay bullish to the highs at 480 and see if we have some momentum to take us into like 500. The other one would be if we get a pullback and more of a correction into like 420 or 410, that's a little bit of a question mark area. Like the bears could get really violent in there, or the bulls could step in and defend. It's a little bit more uncertainty, but I still think it offers a buying opportunity because we'll hit trendline support, we'll hit past resistance to become support, things like that. So structurally speaking, I think the technicals are really clear on the SPY, which to me is just a matter of time before we start to see if the correlation stays true. Typically a stronger stock market and a broad market rally is a weaker dollar. So thoughts on that,
Chris? I want to add your S&P concept here. So I've just pulled up the S&P 500 the futures reflection version, just because I know a lot of our audience, some people trade ETFs. I know for Chris, you and I, we trade ETFs, but just keeping it broad speaking, the S&P 500 to relay it back to your thoughts, for those of you guys who don't know, SPY, SPX 500, they're the same thing. They're just trading on different exchanges. But one thing to say here with your thought there, Chris, is, if you're somebody out here, this is my take on it. If you're somebody here bullish or bearish, this market recently has been the obvious trade has kind of squeezed out, in my opinion, Chris. Like we had 2023, there was like this big optimism. Inflation is falling. We're seeing some victories from the Fed, and that thing just squeezed all year long. And guys who don't trade the S&P 500, this is dollar reflective as well. That dollar bearish trend was super prominent and super obvious for quite some time in 2023. I know, Chris, you and I, we both captured some of that move. It was awesome. But the thing here too is we also have to get to a point where it's like, well, and now what we're seeing is inflationary pressures are kind of still sticking around. We've no longer got, just stellar earnings. We're seeing a weakening consumer. We're seeing oil prices rise. You've got several things here that kind of, I think, have justified this cool down in stock euphoria. And, what I would say from the technical perspective, I totally agree. If you start to see some of these breakouts, you don't even need necessarily a reason. Stocks go up over time, and they'll find many reasons to continue to rally. And if that starts to happen, then so be it. I'll probably, what very likely will happen is we do get some strong catalyst, whether it be, like you mentioned, the AI trade or something else. But I like that scenario. The other scenario is, of course, being open to the idea that maybe this inflationary thing and what we get from the Fed today does continue to put downward pressure on indices and, guys, likely strength to the dollar. When we're talking here, we're talking about several charts at once here. Yes, we've got the S&P 500 pulled up. We're talking dollar. We're talking fundamentals on lots of charts right now. But again, big thing I would say is we're in that choppy range, a bit of indecision. We've got to see if there's going to be key breakouts here, one way or the other. So, Chris, let's go to the dollar and just kind of see if there's anything there to talk about. And I also would love to just get your thoughts in terms of how are you maybe positioned for today's volatility, as well as how will it influence your decision next, not just S&P, but anything else?
Yeah. So current positions I have running, I am long dollar Swiss. I am long Aussie dollar, long New Zealand dollar, and I put on a pending sell for a swing trade on dollar CAD short. So I'm really mixed where I'm willing to take dollar Swiss up for positive rollover. I just launched a new course and program. My goal is to take a forex account and double it in the next 6 to 12 months. So we just started that process. I think we started my first class on the 8th of September. We're already up 250 pips, and we're just going to compound and add and build positions. A lot of it's Swiss related. A lot of it's positive swap. And so back to the dollar. I mean, like I said, Aussie dollar, I'm bullish. I'm gonna price average into that one. New Zealand dollar, same thing. The correlations on those have been, a weaker dollar. Strongest currencies have been Aussie, New Zealand by far. I want to be short dollar CAD. I think oil is we've topped a little bit the last 2 days of trading, but there's still plenty of room to maybe volatility wise spike up to $95 to $100 a barrel for US oil. That's going to be the big inflation scare potentially. Commodities are running, a lot of it's gas, oil. Copper's been stable, nothing crazy, but like if you look at sugar, look at coffee, look at soybeans, a lot of other commodities have been up as well. So oil still a lot of pressure on the whole inflation picture. And then, so I have long dollar Swiss because I want to be short the Swiss, short dollar CAD because I think oil is decently stable and still going to rally. And then commodity-based pairs, Aussie, New Zealand benefit from that with a potential weakening dollar and a broadening pattern. So it's a good mix where I'll have winners and I'll have losers and I'll manage them accordingly where I'll turn them all profitable. But I'd like to see where the dollar index goes. And like you said early on when I first joined in, right now the dollar index is still a bullish trend until it's proven otherwise. And I don't know how much more is in it necessarily. As far as timing and seasonality, I mean, typically the bullish time for the stock market and risk appetite and risk on is October to December. Your Q4, your Q1, those are typically very bullish times. But I just saw this headline right here. I've got my charts pulled up, Nick. Countdown to U.S. government shutdown. That could literally be the catalyst where it's easy to be uncertain. And then as soon as we have the 11th hour results or the 11th hour resolution, there's your catalyst to potentially rally. Right. Because right now the Fed's the commentary is played out. Right. Powell's going to say the same thing. We're not raising rates. They're just going to keep using, their talking points and commentary. It's going to be neutral to hawkish. Right. I don't think the Fed's going to turn dovish at all. But I mean, the Fed's transparent. The Fed has pretty much telegraphed what they plan to do. The market's anticipating cuts coming in May and June. Everyone's talking about soft landing. Okay, fine. But the government shutdown stuff, that's a whole new thing to worry about now, right? It's a whole new thing to be uncertain about. So maybe that's where we have
Totally.
more lack of volatility, more pausing, more uncertainty, but then a little bit of resolution that comes out of that. There's your catalyst to drive us higher and just carry that momentum on the rest of the year.
Yep, exactly. And as you mentioned, Chris, you know, the likelihood of anything other than just a hold today is incredibly, incredibly unlikely. So what we're expecting, guys, I should say this, is that, you know, we do have less than a minute now until we get, of course, the confirmation that that is in fact the case, or not. We actually have less than that coming in hot on this. So we'll stand by and watch this number. But again, guys, the big news, of course, will be the statement that comes out and more forward-looking projections, which will come out here throughout the afternoon. So let's go to breaking news. We'll come right back in here and talk about this and react. Coming in, like I said, almost certainly 5.5. Anything other would shock us here, shock the markets probably tremendously. And there it is, 5.5%, exactly as expected. And on the initial reaction, we've got the euro spiking down, which is quite volatile. Euro spiking down. We've got, let's see, any key reaction here, NASDAQ. And Chris, like I said, if you have anything on deck, please feel free to share.
Yeah, sure.
Oil also shooting, not too much there. Dollar yen. Look at dollar yen, guys, jumping up on the minute chart. Big spike up. One thing I would say for those of you guys watching dollar yen, we're still we're very much similar to the 2-year yield dollar yen. They're both bumping up against the tops of this range here. It'll be very interesting to see if we get any sort of solid follow through here this afternoon. If that happens, any pullbacks, in my view, still look dollar bullish. But yeah, interesting. Anything on your desk, Chris, in terms of anything exciting? I mean, not really yet, but
yeah, I'm just watching. I've got the SPY pulled up, the Q's pulled up. I want to see if we have a bigger move. I mean, literally today we had a $1.25 gap that got filled, and nothing has happened in the broader market ETF. So, you know, I've got some straddles going on. I did this early in the week. I've got straddles out to next week, so I'm trading some options, and I want to give myself time to let the Fed give the noise, give some volatility, give the reason, or give the market a reason to open up and do something. I've been really surprised, Nick, that, you know, we had a pretty volatile summer in stocks. We had a pretty volatile summer in currencies, and September usually delivers a little bit better than this. It's been a weird September. It's been pretty quiet, but also like directionless. So, yeah, I'm just kind of waiting to see where the bigger levels are. You know, I'd love to see the SPY make a move down to 435 or make a move to 455. Give me something to play. Initially, I'm just looking at like a 5 and 15-minute chart. Initially, we're down about $2 right now. But, you know, in traditional FOMC fashion, you have a window right now from 2 to 2:30. This is where the market's going to move initially. And then Powell comes in with his press conference. And then there's typically a totally different move. And it's just a noisy, high volatility day. But I wouldn't commit to any single direction for the day. I think that if you have inefficiencies in the first 20 to 30 minutes, they usually get filled in the next 30 minutes. So just be careful how you trade for the hour, and then see how the market closes. I think that's the most important thing is 5 p.m. forex close and rollover, you know, 4 p.m. closing bell. Look to see if you have any big obvious levels that are being breached.
Absolutely. Well, Chris, thank you for joining me on the show. I know that, you know, in terms of these days, these could be crazy, crazy days. So it really helps to have somebody, especially like yourself, who's been doing it for quite some time, who could break this down in terms of macro. And I think one thing that we do together, Chris, here with these sessions is there's a lot of hype around this, but we reduce expectations for you know, some clear, obvious trend in the market with these, you know, the initial rate statement that gets put out, the interest rate decision is rarely very surprising. And I think a lot of traders probably have heard us talk about that and probably have saved themselves from doing something stupid just by hearing us talk about it. So, Chris, I want to thank you for coming on. Thank you for sharing with us your positions, where you're looking to be, and how you've got the straddles going on, which, of course, for those of you guys who don't know, is like it's an option strategy. You could search it up up on Google if you aren't familiar, but it's kind of like, being kind of exposed to both potential directions if a big move happens, which can be really, really cool. So Chris, before we say goodbye for this time, let me also remind everybody in the chat, if you guys have not already subscribed to Chris Pulver on YouTube, he mentioned it earlier. He does a wonderful live show. That's how we found him to come on to our show here and help us out with these segments. Fundamental trader, technical trader, Chris, you've got it all. So thank you very much for coming on the show, and we'll see you next time.
All right. Thanks, Nick.
See you, Chris. Yeah, guys, always remember, if we have a guest come on, we do some scouting to find these people, and Chris is the guy. He is very, very savvy with what he does. Trades options, trades forex. He's been doing it for quite some time. He's educated many, many traders. Highly recommend to follow if you have not already. Like I said, his YouTube channel is linked in the description or in the chat here now. So make sure to go show him some love. I want to talk gold, guys. We've got some volatility happening on gold right now, and oh my goodness, gold has just been very bullish today. Let's actually go full screen here so we can take a look here. So gold, big push up, right? Really big push up. Now the news is coming in. Is it kind of one of those buy the rumor, sell the news days on gold? We'll see. But at least so far, from what we've got on the desk, that hold on interest rates does seem to be kind of initially the reaction is bearish. But again, we are yet to see the highly volatile move in the market that we are likely to get with the press conference that will follow. We'll be sticking around for that. So don't go anywhere. Again, the news is not over by any means. The biggest moves are yet to come, most likely. And in terms of gold, I want to break this down for the day traders out there. Guys, we had a huge move up. And if you break down this chart in a really simple fashion, notice something with me, if you will. 1935 was a key level of resistance. Sellers, when the price came up to this area, sellers got strong, pushed it right back off of this resistance point. But then the bulls came in strong. They really pushed this thing higher. And it's a big surprising move, to be completely honest with you guys. I thought gold wouldn't. Now, I don't have any positions open on gold at this time, but I figured gold would probably roll over and keep going in its downward trend. Not the case. Gold made a substantial push to the upside, and now we're seeing the pullback. So if you've been watching gold, first of all, this is a good lesson. Be careful that you're not the person who can't help themselves but chase gold. If you're up here buying these moves, be so careful, guys. Buyers who chase this stuff are probably sitting and pulling their hair out right now, being all nervous about this move because, again, the price already had happened. So I think patience may reward people who wait for pullbacks. If you are bullish on gold, maybe a pullback to the 61.8. That's a beautiful technical setup, in my opinion. We've got our fibs drawn from swing low to swing high, and you may get that pullback. You may not get that pullback, but again, the meeting is what is coming next. In 20 minutes or so, we'll have, I think it's Jerome Powell speaking, which will cause more volatility as the press conference ensues. So don't go anywhere. We're going to be sticking around here for that part of the stream as well. And highly, highly recommend that if you have some time, get yourself something to eat, something to drink, whatever, and stick around with us because there is plenty of stuff coming. This is probably, like I said earlier, probably the most impactful stream of the year that we will do. So for bulls out there watching gold, let's see if we can get a pullback. 1935 could be an interesting area to watch. As Chris mentioned, S&P 500, NASDAQ, some big moves here happening on the initial spike due to this. But again, the big moves have yet to come. If you're watching the NASDAQ here, guys, let's do an hourly chart breakdown. Whether you're bullish or bearish, sellers have been strong in this area. 15,300 has been a tough spot for sellers to crack. Again, we can mark that in red to signal that sellers have been real strong. I'm sorry, for buyers to crack. Buyers have not been able to get above that level. If you're watching NAS, watch for two things. Again, if we get enough volatility to break us through the upper or lower limits to this consolidation, then I think you have something to go off of. If sellers get real strong here and push us clean through the lows, retests may take over. And I'm going to tell you something. I don't usually short the indices, but if there was one that I would be more bearish on, it would actually be the S&P 500. I'll show you why. The algorithm that we use to help find setups is bearish, actually very bearish on the S&P 500. This is a rare signal that we don't usually get on the EDGEFINDER. The EDGEFINDER takes into account many fundamental macroeconomic figures, as well as the commitment of traders data, retail sentiment, and seasonal trends. And it computes biases for different assets. Like, for example, we have oil up here, we have the dollar yen, we have dollar CAD, and we have the dollar crosses. So right now, the EDGEFINDER is bearish on some US dollar crosses like the euro, the pound, the Aussie. And it's also bearish on the S&P 500, which is interesting. We do not usually get, it's rare to get a strong bearish reading on the EDGEFINDER for the indices. It's for on purpose that way, because again, the indices we generally are more bullish on, but if there's a signal here, it could be very interesting. So how do we play this, guys? Indices traders, S&P, if somebody asked me, Nick, if you were to trade an indice today, if you had to trade one, which would it be? It would be, for me, the S&P 500 on a breakout retest to the short side, not something that I usually will do. Again, breakouts, if we get some serious sellers in here, sellers on selling on retests is where I'd probably be positioned. Again, very rare for me to short the indices, but today we're getting a rare signal from the EDGEFINDER. This automatically calculates a signal for you on various assets, anything from currency pairs to gold to oil to indices. If you trade NASDAQ, if you trade dollar crosses, yen crosses, pound crosses, whatever you trade, the EDGEFINDER takes into account a ton of market data, all this stuff on the screen, and generates biases. If you want access to the EDGEFINDER, we're doing something here that is a very rare thing on the show. We don't usually do this. If you'd like access to the EDGEFINDER, we are doing a live stream sale, which will get you access to the software for 45% off. This is the biggest discount that we have done all year. And if you would like access to the software for this discounted price, again, it is on the stream only. This is a celebration of the stream. We've got a lot of people in here. If you've been thinking about getting access to the software, click the link that's being dropped right now. This is what it looks like. Click this link, click chat now. And while the sale is only, it's 1 hour only, we're giving 45% off discounts on the EDGEFINDER for stream viewers. So message us right now, click that link, take advantage of the sale, and don't miss it. Again, we do not do sales that big, hardly ever. So it's kind of your last chance. We're only doing it on the stream today, and then it's going back to its usual price. So yeah, I mean, for me, the indices overall have been pretty mixed, but now we've popped into this S&P 500 bearish reading, which is pretty rare. And I'll continue to watch this one as we go through the stream. Oil, I'm still bullish on. And the question is, Nick, is there a setup here on oil? And I'll give you guys my honest take. I think that there may be an opportunity here for me on oil to the long side. I'm watching this one myself. I very well may take a trade on stream if we continue to see some sell-off in the oil market. I am overall pretty bullish. And part of the reason for that is our algorithm is pointing bullish on the oil market. We get a +8 on the score. That is showing COT. We could take a look at the smart money tracker, by the way. Oil is big. So this chart, again, oil prices have been in a nice upward trend, and I want to be a part of this. So I'm looking at this as a possible pullback opportunity. You may say, well, Nick, didn't we reject here? And yes, we did, but I still really like this level of support. And if price wants to double back and retest it, I very well may take an opportunity to try and get long on oil. Will I be right about that? Maybe, maybe not. At the end of the day, we're risking money anytime we take trades. So I'm not certain that oil is going to go up. I'm taking an educated guess. So if price comes back, I will likely get long oil here, guys. I'm going to try and catch this pullback zone. And if I can get it, great. We'll take that trade, whether it be on live stream or within the Discord channel after stream ends. I'll be keeping an eye on oil. So right now, watch list for me is oil. I want to keep an eye on gold for viewers who like trading gold. I don't personally have a bias strong enough to take a trade on gold right now. It's technically moving higher, but fundamentally, I'm a little bit mixed with all this dollar strength. But I'm really interested in oil, not something I usually trade. And finally, S&P, I'm going to keep an eye on it, but I'm going to be especially picky with any setups on the S&P right now. Guys, we've got 15 minutes to go before we really kick things off with the Fed. For those of you guys who would like to see, it's the Fed press conference, which we'll pull this up. It's going to be Jerome Powell speaking and going over kind of This is the big one. This is guidance. Remember, if you're newer to trading, markets are all about what is coming next. They're not about what's happening right now. It's all about what is coming next. And in this press conference, the reason this stream is so important today is because in this press conference, we're going to get vital insights as to what the Fed generally sees coming down the pipeline. What are they doing next? Are they going to keep interest rates very high for very long, or are they going to cut them? That's where things get interesting as we get closer and closer to this press conference coming in hot. But like I said, oil is a trade setup for me. If you're watching dollar, let's take a look at dollar together. I want to show you guys one more thing here. Dollar bounced nicely off of this level. Big support zone held here. Price came back, didn't even get to this support level. You got this nice level right here, which actually held. And if you're a dollar bull here today, guys, here's my thoughts. I'm bullish on the dollar. The price action looks really strong, continues to push higher. If you're looking to buy dollar, here's my opinion. My opinion is either a pullback into some of these zones to be a dollar bull, in which case maybe I'm looking to go long dollar yen. Maybe I'm looking to short euro dollar. The other side to this trade, guys, would be scenario number 2. We get a breakout through the highs and we get pullback plays. Just as interesting, if not more interesting to me, would be a clean, fresh candle high like these moves here. Pullbacks, very intriguing. Okay. So yeah, do me a favor, guys. If that makes sense to you, if you're with me on that, type yes in the chat. Blow the chat up for me real quick. Again, we've got 15 minutes before the press conference comes in. In just a moment, we're going to go to Frank and see what he kind of thinks and what he's forecasting for this upcoming press conference. But before we do that, type yes in the chat if where we're at makes sense to you. If that dollar breakdown, my opinion on that, if that makes sense to you, just let me know in the chat. It would just help me out to make sure I'm going at a good pace and that everything is making sense. I want to take a look at where smart money is positioned. If you guys don't have the EDGEFINDER, one of the key things that is useful about this tool is the smart money tracker. The whole point of the smart money tracker is to take a look at what, well, exactly in the name, smart money is doing. We're taking a look at hedge funds, banks, institutional traders, the pros in this industry. What are they buying? What are they selling? If you think about it, if you're new to trading, you have to be humble for a second and say, well, if I know that the smartest traders out there are buying something, do I really want to be shorting that? Or if they're really short something, do I really want to be long that? Maybe I want to go with the pros. Well, the way to do that is to track smart money. And we do that through the commitment of traders data pulled into the EDGEFINDER and shown on the screen now. So what we're looking at is the net institutional positioning. And down here, we've got the latest commitment of traders report filed. So what I want to show you guys here on this list is that as we go into this meeting, let's look at the dollar. The dollar is pretty 50-50. Here's blue, here's red. What does that mean? It means the positioning of institutional traders on the dollar contracts being traded on the futures market reported by the CFTC's commitment of traders report. I know that was a mouthful. Long story short, big money is about 57% long, 43% short. So they have a slight bias to be bullish on the dollar. Guys, gold also very bullish on the net positioning, 68%, let's call it. But that's not everything that we want to look at. Feel free to pause, by the way, if you want to look at any asset that you're trading. I know some of you guys might be trading the CAD right now, or the Australian dollar, or the pound, or the euro. Feel free to take a look at whatever you're looking at. But this also is key. Down here, we've got the latest changes to the COT report in the recent filing. What you'll notice, guys, is that there's been, and this is probably why I'm going to be skeptical on shorting the S&P 500, a lot of institutional money moved into it. This net change column shows us what institutional traders did in the most recent filing. And in the most recent filing, the S&P and dollar saw the biggest percentage increases in net positioning. That's huge. Same thing with the Japanese stock market, the JP225, the Nikkei saw some increased buying. Flip it around and let's take a look at the most sold things. Well, silver, very sold. CAD, very sold. If you guys are watching the CAD, keep that in mind. A lot of traders trading the CAD right now. The Swiss franc, and finally, platinum. These things have been sold very heavily by institutional traders in the most recent reporting. So why does this matter? Well, again, in the top setups, the COT report bias is generated by the software and put out here so that we can get an idea. Last thing I will say before we bring in Frank, remember guys, the EDGEFINDER is, I keep saying this because it's only a 1 hour sale. It is currently 45% off for the remainder of this stream. After the stream ends, the price goes back to its usual price. If you want 45% off, message us right now here. Click this link that's being dropped in the chat. Click the 1 hour only sale, 45% off the EDGEFINDER. That is the biggest discount of the year. And the price is going back up after the stream ends. So click and message us right now if that's something that you would like to get a copy of before the stream ends. You'll be connected to someone on our team, someone who is trained to answer questions about the EDGEFINDER or get you set up with a copy here while we're live on the air. Now, guys, we're going to go to Frank and ask him a little bit about what he thinks. We've got 12 minutes to go before Jerome Powell steps up to the podium. Let's take a look at Frank. We'll bring him in. But before we do, actually, sorry, I'm throwing off the producer all over the place. We're going to take a half-second break. We're going to thank our sponsors here, and then we'll come back with Frank. We'll let him set up here, and then we'll take a look at some charts. So coming right back at you right after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, we're back with Frank, the co-host here of the show for a little bit. Hey, Frank, what's going on? And take it away. What are we looking at ahead of Jerome Powell stepping up?
Right. So we all saw they skipped September hike. I think the question now is, how will this affect inflation? Because we've seen a pause the past couple meetings, and what we've seen is CPI going up or remaining unchanged. So things like that can be, I guess, somewhat concerning for risk appetite. And what I look at now is the 2-year. So what is the yield doing right now? And it's been testing that 5%, 5.1% level for so long, and it's just now looking like it's holding itself above it. But just because of the decision, it caused wild swings and all over the place. So this can just be a temporary move, but just seeing it above 5% and now we're in the 5.1s is still concerning, because if we were to scroll way out, yields haven't been this high, or interest rates haven't been this high since 2007. So the fact that we're at this level and staying near this level for this long is something to be definitely heavily considered, in my opinion. As far as the statement went, what I saw from news articles was he actually mentioned a more solid growth in the economy, which is not what was stated previous. I think it was more so moderate. Now he's talking about, okay, we're seeing a more of a pickup in the economy, and that is kind of a hawkish thing, I would say, in my opinion, just to see that the economy is doing better. And I mean, we've seen higher jobs numbers, although I don't think he really mentioned anything about jobs being concerning right now. But overall, I think this means, regardless of the hikes or the pauses, I think what is going on here is that rates are going to stay higher for longer. And I know we've talked about that before, but I think that because of inflation and the economy, like seeing higher GDP numbers, seeing higher NFP over time, is still not in compliance with what the Fed wants, clearly because CPI is coming up. So either way, what I think would be the most logical stance and the very transparent stance from the Fed is higher rates for a longer period of time. And then if it gets out of control, then they'll probably have to hike again. So just overall, still not very bullish on the risk on assets, but you never know that the stock market can always shrug this thing off like they've been doing the past couple months. So
Yeah, no, thanks for breaking that down, Frank. I mean, a key thing that you said there is Jerome Powell's mentioning of, economic strength is in some ways incredibly hawkish, right? Because again, if he's paying attention and nodding to, economic strength, yet inflation has remained stubborn, right? We've seen elevated inflation. What that means is that, again, the Fed is going to have to kind of stay stubborn here and let those interest rates work over time. And the stock market hates that because for beginners out there, when it comes to fundamentals, what you need to know about interest rates remaining high, which is of course the whole topic of today's stream. If they stay high, that's going to squash company profits for a longer period of time. Does that mean stocks are just going to crash? No, not necessarily, because a lot of great companies will still persist great. I mean, Apple will still do fine, regardless of higher interest rates. It's just going to cut the outlook for stocks to be less optimistic. And, again, what that means is, for me right now, the trade is stay dollar bullish and, wait for something to change. As Chris Pulver mentioned before coming on, we talked a little about, Frank, I think this was kind of useful. The obvious trade has left the building, I think. If I show you my screen for a second, I mentioned this to Chris, and I think, Frank, you and I have talked about this as well outside of stream. A big thing for the S&P 500 is the obvious trade in stocks isn't quite there anymore right now. For 2023, a lot of it was just inflation falling, things looking promising, and it looks great. And the stock market was an easy trade. The indices were great. The dollar was great. You could just short the dollar and do well. Well, right now, we've entered into kind of a stubborn sideways market where now the Fed is like, well, inflation is staying strong and the economy's not cracking. So, we might just need to stay here and stay put for a long time. That is going to put pressure on the dollar to the upside. As you mentioned, the yield curve still going, or the 2-year yield still going higher. The dollar is going to be elevated by that as well. So, I don't know, Frank, I think we're on the same page with that, but I am kind of, I'm very neutral on the indices right now. And I'm pretty bullish on the dollar. And what's confusing to me is gold. Gold, and you and I, Frank, we've been on the same page with this. Gold doesn't even seem to care. Despite all this kind of pretty bullish dollar bias, the gold bulls are just saying, F you, I don't care, we're going higher. Because, a dollar strength has pushed down other counter currencies. The euro took a beating a little bit here off the reaction. It hasn't been doing that well. But gold, it almost doesn't even seem to be affected right now. That's not usually the case, guys. But right now, the gold price looks bullish. Do you have any ideas on that, Frank? Or I know that's like the hardest question to answer right now, but what's your reaction to all this gold bullishness?
On a technical level, I mean, yes, it does kind of look bullish. I've been pretty bearish this whole time, and that whole time price has been trending upwards. So
yeah,
it's hard to say. Just judging by everything going on fundamentally, this is what I wanted to show on a zoomed out scale. This area right here is just highlighting the rates from 2004 to 2007, 2008. So during this period of time when rates were coming up and then eventually hitting this peak just above 5%, the stock market, real estate market, everything was flourishing. Everything was just best shape in the economy. But we all know what happened in 2008
right.
to the stock market. Everything came crashing down. But simultaneously, the yields fell as well. So what we're kind of looking at is we've reached higher rates in a shorter period of time to battle inflation. Meanwhile, the stock market, gold, everything is doing its thing and just running bullish. So it definitely raises alarm. I don't know if I can look at gold and say this is obviously a buy here, because I don't think it is at all.
Yeah.
I don't know if I can look for shorts either, because
Yeah.
every time we see resistance, it breaks further. So, yeah, I guess I'll be a fence sitter on gold for a while until I can, see something else. If the Fed next meeting talks about cutting rates, say inflation comes down a lot more than they expected and things are going well, although I don't know if that's going to
Mhm.
be true, then I'll start looking at, okay, so gold directly trading against the dollar is probably going to look way more bullish than the dollar, especially years down the line. So seeing rates this high, and then seeing the 2-year yield continuing to push higher, and if not maintain at these current rates, it's really hard to say that gold is going to keep going.
Yeah. Yeah, no, I'm with you on that. I mean, for me, same story. Fundamentally, kind of bearish on gold with all this dollar bullishness, but technically on gold, bullish. So where do I get left with that? Same thing. I sit and I wait, and I wait for both to line up. Either the fundamentals concave and they go the other way and they start to look bullish, maybe dollar weakness comes in and something changes, or the other way, the technicals start to break down. And Frank and I have been trading for a while together, and when we look at setups, we're looking for fundamentals and technicals to align. It's not always that you get signals, and trading is not always fun. Sometimes there's a lot of really frustrating waiting. So guys, we're now, please know, the spike that many traders are expecting right now is unlikely to be immediate, because what we're going to get here is we are going to get commentary from Jerome Powell. He's probably stepping up to the podium as we speak, which will cause some volatility in the coming 30 minutes. It's probably not going to be just an instantaneous spike such as NFP, just kind of the nature. Newer traders, if you aren't familiar with that, that's how that's going to work. Frank, I want to thank you for coming on and giving us your take. That was, I think, really insightful to a lot of traders. I know you and I have talked about that before, but for the audience who may be wondering about gold or the dollar, I think that was really helpful, especially with the yields and the gold conversation that we just had. So thanks for showing us that interest rate chart. And Frank, we will catch you back on the next stream.
Yep, thank you.
See ya. Always good to have Frank on, guys. If you guys are in our Telegram channel, Frank and I, we do a lot of great work in the Telegram channel. If you're not already in there, click the link in the chat. We'll drop that real quick. If you'd like to join us in Telegram, we share our ideas and analysis there each day. So please feel free to join us there. Oil might be setting up here for me, guys. I'm being cautious because we have, again, Jerome Powell is likely speaking right now, and headlines will probably start to reflect it momentarily. But I'm watching that very much right now. So let's see. Again, not a chart that I usually trade, but oil has been very intriguing to me right now. And depending on what happens here in the coming minutes, I very well may actually be entering into a trade. Let's actually get something interesting going, guys. Let's get our 4 charts, just so we can watch this, because again, things are probably not going to move spiking instantaneously. But let's put gold in the top right. Let's keep oil in the top left. I'm going to put the let's put the NASDAQ bottom right. And we'll put the dollar index in the bottom left. We got a very diverse chart here today. Dollar index. Again, dollar is bottom left, oil's top left, gold top right, NASDAQ bottom right. NASDAQ seemingly bouncing pretty strong here on the 15-minute. This way we can keep an eye on a lot of charts at once. Keep an eye on that one. That NASDAQ, all of these charts can move suddenly if Jerome Powell says something that really stirs the markets. Yeah, guys, generally speaking, my bias is S&P kind of bearish. Oil, bullish. Actually, very bullish. Let's see. US 30 also getting bearish. Could look at the Dow. Gold, fundamentally bearish, technically bullish. So mixed, meaning no trade on gold. Nothing to do on gold for me right now, guys. Look at that dollar coming down here. Dollar initially spiked up, gave back a lot of those gains, and here goes gold pushing right back up to 1946 as we speak. This is a 15-minute chart in the top right. Gold came down to that 38.2% retracement zone and just immediately pushed off of that. Look at that price action, guys. Push right off that. NASDAQ still staying strong here, pushing off the lows, and dollar coming down. Look at that. Dollar down might create some opportunities if you're watching dollar crosses, guys. Let me actually, speaking of, let me just take a look at dollar yen. Dollar yen. Don't love that chart, to be honest. Euro USD, take a quick look at that one. I tried shorting euro dollar with a small position. Did not work out, and you can actually see where my entry was now acting as support. So I don't love that trade. Probably going to stay on the sidelines with euro. Oil again is probably the closest thing for me possibly taking an entry. I like this pullback here for a possible long, and I'm already liking the way we're reacting to this. So this very well may be a trade for me here. Give me a second, guys. I'm on my other monitor. I am going to take a look at if I want to take a trade here on oil, what it would look like. Yeah, I'm watching oil very close, guys. I think oil might be an entry for me. Again, not a chart that I usually trade, but I really like the EDGEFINDER's confirmation right now. Bear with me. I'm just looking at off-screen stuff to see if I want to take this trade or not. Okay. I think I am going to take this trade, guys. I like oil quite a bit. I'm setting it up right now. Bear with me, guys, as I do this. If we don't mind, Chandler, if you don't mind, just real quick running a commercial break, guys. Give me just a second. I'm going to set up this trade. We'll come back and I'll give you guys some more information. I just need a minute to 30 seconds to pay closer attention to this stuff. We'll be right back, guys. I'm looking at oil right now. I'll let you guys know what I do in just a sec.
As an aspiring trader, how do you take into account all of the driving forces in the markets at once? You need the EDGEFINDER. The EDGEFINDER allows traders to access powerful market data automatically. Access key sentiment analysis studies, such as the Smart Money Tracker, which shows what hedge funds and institutions are buying and selling. Or unlock the Retail Sentiment Indicator, which shows where retail traders are positioned now. Additionally, for traders looking to incorporate fundamental analysis into their trading, get access to our in-depth economic data scanners to find the strongest trends. The EDGEFINDER also ranks and scores all of your favorite currency pairs, commodities, and indices through our signals and watch list page. This page will show you the EDGEFINDER's current strongest buys and strongest sells by pulling together all of the data. For supporters of our show, we're offering a major discount on the tool today. To claim your huge discount or ask questions about the tool, send us a message using the link that's just been dropped in the chat now. Clicking this link will open up a live chat conversation with one of our trained support reps who can get you set up with the tool today, as well as a major discount. Now, let's get back to the show.
I am still punching in my order here, but I am currently getting long oil. So please bear with me as I continue to do this. I know. Also, while I get this set up, guys, I'll just remind you again, if you have not already taken advantage of the sale, I know some people are grabbing that price before that price goes away. The stream is ending soon. If you have not already taken advantage of the 45% off discount sale. Click the link in the chat right now. Click chat now with us, and then click this right here, the 1 hour only 45% off sale. This is how I find my trades. And if you want a copy, we are celebrating this big stream by offering a massive discount off of our software. Take advantage. Click that link. Message us right now as well on stream, and maybe we can get you a copy for that discounted price before that sale price goes away. Again, guys, I am looking at oil. I really like this setup, and I'm going to go long here with a small size. It is FOMC day, so I'm being careful to keep a appropriate size, appropriate risk on the trade. And I am looking to be long here, stop below market structure. If it doesn't continue pretty quick, I'll stop out for a very moderate sized risk. I am long already. Give me just a moment. I am putting all the credentials in the trade room for members. You guys ever see those videos where they have all the when you have all of those, the monkey that plays like a million instruments at once? That's like me and Chandler, who runs the streams. That's both of us. We're both like two monkeys playing like the cymbals and the drums. It's amazing anything ever gets done around here because we got so many multitasking factors. But it is a live trading stream, so I'm taking a trade, and I'll be right or wrong in front of a million people. Not a million. Humble myself. But there's a lot of you guys. I appreciate you being here. 700 people are watching. So let me get this updated. So I am going long on a pullback to support here today. Strong upward trend on the 4 hour. Bullish rejection on the 1 hour chart. EDGEFINDER, strong bullish confirmation. COT looks great. Economic data looks bullish. All right, guys, that trade is out. And again, I don't trade oil very often, so I'm this number might be wrong. Hold on. Let me make sure. 1261. That is totally wrong. I'm sorry about that, guys. No, it's just off by 1 decimal number. Here we go. And I should also take a screenshot here. Again, guys, I am sorry for the lack of commentary. We're just multitasking here. So I'm getting this trade out, and then I'll continue with some setups, things that I'm looking at. We'll watch this trade. It's a 4 hour chart setup. Kind of a swing trade. I like the pullback here today. I'll wait for a better position in oil. You very well may get it. Again, volatile day today. My stop loss is below the previous low. And also, it's a small trade. I'm not taking a massive position here. I'm taking a relatively small trade on oil. I don't have a take profit. My goal is to trail stops. So I've got the trade signal. We're all set here. Let's see what we can get. And again, if it stops out, no big deal. It's a small loss on the account. That's the key thing, guys. Most traders think that you need to be a superhero trader, and if this thing goes up, you're going to triple the account. If this thing goes flying higher, my account might tick up a couple percent, and that's okay with me. I'm not looking to make massive gains. I'm looking to protect my capital first and foremost. So even if I take a loss, it'll be a small one. Yeah. Took 10 contracts long in gold futures. Wow. You are a brave man. Again, for those of you guys watching gold, I mentioned this earlier. I think pullbacks to 61.8 could be interesting, but not quite at a point where I think there's buyers ready. But again, this thing is so bullish right now, it could just shoot right off this 38.2. From Powell, we are prepared to raise rates further if appropriate. That was pretty much expected, I would say, to be completely honest. But good information. Thank you, Mighty King, for sharing that. Fed officials still see one more 0.25 rate hike increase in 2023 and expect to hold rates higher for longer in 2024, 2025 than in June projections. Interesting. So hawkish commentary. Let's see if the market's buying. Is the market taking it? They are. Dollar's showing strength off of that commentary, and that's a big deal. Hawkish hold. Yes. A hawkish hold is accurate, I would say, from their commentary. Continuing to play defense is the Fed, and very likely, and this is kind of what was expected, like I said. So again, I continue. I stand by what I'm at, what I've started the stream at, and where I'm still at. I'm bullish oil. I'm bullish the dollar, right? Pretty much all dollar crosses here are bullish. Dollar CAD bullish. Dollar yen bullish. Dollar Swiss. Dollar ZAR bullish. Bearish on the counters to the dollar: pound, euro, Aussie, Kiwi. So congrats to anybody who is making some money off of those moves. I am looking for setups, generally speaking, on these things. And again, guys, this is where I generate all of my setups. When I take a trade, it is because the EDGEFINDER helps me find it. It uses macroeconomic data and COT data, retail sentiment, seasonal trends to generate biases, setups in a bullish or bearish direction. If you don't have a copy, this is a last call. I will say this is the last chance. We're going to end the stream here very shortly. We are doing, as mentioned earlier, if you missed it, we are doing a massive 45% off discount of the EDGEFINDER right now. And if you have not taken advantage, click the link in the chat right now. Again, members or viewers here on the stream, if you would like a copy of the EDGEFINDER, this is your chance to get the biggest discount of the year. It is a 1 hour only sale. When you click that link, click the 1 hour only 45% off. This is a sale only for people who are with us live on the show right now. So click this link, chat with us on the website. Let us know you'd like to take advantage of the 45% off sale, and we'll hook you up with the best discounted price you could possibly get for the EDGEFINDER. And this is a thank you to stream viewers. You guys make it possible for us to build these software tools. We cannot thank you guys enough as an audience. The support that you guys give us, the views, the support, this is what allows us to fund these major projects that cost us well into the multiple six figures to build these tools and to keep them at the level of quality they're at. If you would like a copy, take advantage while you're on the stream. We're doing this for you guys as a thank you. Subscribers get a massive discount that nobody else is getting right now for this special occasion. So take advantage of the 1 hour sale before it ends. Again, price goes up shortly after stream. We'll give you guys like 15, 20 minutes. So message right now if you want to take advantage before that price goes right back up to full price. With that said, guys, that's going to wrap up the stream. Members, I'll keep you guys updated with what I do with my oil position here. We'll watch this one closely the rest of the day, and I'll keep you guys posted on what I decide to do. If I trail stops, if I close it out, if I take a win, take a loss, whatever happens, you can get all the access to that in the Discord group. If you're not in the Discord, last thing I'll say as we close out the show, we'll drop a link to the free Discord. If you want access to the free Discord, please click the link in the chat right now. And if you don't, and if you'd like to, again, also get access to that sale before it ends, the link is also in the chat as well. Thank you guys very much for tuning into the stream. I hope you learned something. I hope you got something out of it. I certainly did. It was a very eventful day, and we'll be back with more coverage for the remainder of this week. Thank you guys for watching. Have a wonderful day.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you create a new trading account with ACAP, you can get tools like the EDGEFINDER completely for free. Check the link in the description for more information. From all of us at A1 Trading, have a great day, and we'll see you next time.